Hello, I'm Steve Carlisle. As you can see, I'm a Leeds United fan. I'm also an accountant and I'm also a financial educator. So here's my little chat on profit and sustainability rules in the EPL and how they work. And I'm doing this for all frustrated Leeds fans out there who are thinking, wow, we're going to get 150 million coming our way. Why can't we spend it on new players? And you've got a list of players and they add up to 150 million, less what we're going to get for so and so and so and so. And I get very frustrated when I think about this, even though I know the rules, but the rules are just not that straightforward. So I'm going to give you a little chat about how the rules work. Might go completely over your head. If it does, that's a good thing because you won't start ranting about it again, knowing that you don't quite follow it. Hopefully, you will understand it a little bit, and you'll also realise that it's just not as straightforward as we think it is. So here we go. Profit and sustainability rules. What about buying new players? So if we are going to get a load of money in, why can't we just spend it on players willy-nilly? Well, when we buy players under the EPL's profit and sustainability rules, and the same is true under the championship rules as well. When we buy new players, we need to be mindful of two things. The first thing is we need to stay within the PSR rules. And those PSR rules, as I'm sure you're quite aware, are that we can lose a total, assuming we've been an EPL club for many, many years. Slightly different for Leeds this year because we're moving from one system to another. But assuming you've been an EPL club for many years, you can lose up to 105 million in your profit and loss account. 105 million you can lose over a 3-year period. So it's an average of 35 million a year. So I'm gonna assume that the accountant at our club, Leeds United, is very mindful of staying within the 35 million loss each year. They don't want to go over that. Or if they do go over it, they have to make sure the loss is less for the next year. So they stay within the 35 million loss. Okay, so we need to stay within the rules. And of course, we also need some cash. Yeah. So if we're going to get 150 million cash, why can't we just spend 150 million? Well, because of the PSR rule. So it's a little bit like if you inherited some money at home, 50 grand, whoa, a legacy from a long lost relative. Why can't you go out and buy a new sports car? Because your partner's a bit like the PSR rules. Your partner says, no, you can't spend it on a new sports car. You can spend it on a second-hand Golf, slightly cheaper car, because we need to keep some money by. We need to be mindful of our household expenses, new decorating to do, paying the food bills is getting harder, and all the rest of it. So the PSR rules keep us sustainable as a club, and our partner keeps us sustainable as a couple. Okay, so the PSR rules are based on your profit and loss account, the figure in your financial statements, and the other thing I also make you aware is actually, even if we don't have the cash, we can always go out and borrow the cash. So just because we're going to get 150 million doesn't mean that our spending is restricted to 150 million. It could be more if we chose to borrow it. But what's really important is whether we've got the cash or whether we're borrowing it or whether we're doing a bit of both. What impact does going and buying a player have on our profit and loss account? Because that determines our PSR position, which we are bound to stay within. So I've got a little example for you now. And you might be looking at that slide and going, well, hang on, profit and loss account, balance sheet. We're not going to do anything complex. I'm not going to give you any complex figures, but let's say I'm the accountant, I'm the CFO, the Chief Finance Officer of Leeds United. And I'm starting and I'm looking at 1st of July, because that's when our financial year starts, 1st of July 2025 through to the 30th of June 2026. That's our new financial year. Let's say I want to stick within the 35 million loss. So I do a budget, a prediction of what my profit and loss account is going to look like next year. So my profit and loss account is going to be made up. This is very simplified. My profit and loss account is going to be made up of my income. So my income is what I'm going to get from my gate receipts, selling tickets, what I'm going to get from advertising revenue, people who advertise at Leeds United, what I'm going to get from TV rights, what I'm going to get from merchandise that we sell, what I'm going to get from catering that we sell. Lots of different forms of income that we've got, but income is money that we earn by trading. That's very important. That it's money that we earn from trading. And actually, 220 million wouldn't be a bad guess at what we might get next year, because it's a lot more than we're getting this year, by the way. but it might be a good guess because our TV revenue is going to go up anyway. So the figures are reasonably in the right ballpark. Our expenses, let's say our running costs. So running costs would be things like paying the players' wages, paying for match day costs, like all the people we have on duty at the match day, paying for the costs of things like the merchandise that we sell. We've got to buy it in the first place, and the food that we sell, we've got to buy that. We've got to pay electricity costs, lots and lots of different expenses we've got running a football club. Let's say that's 210 million. That wouldn't be too far away from what it costs to run Leeds United. And let's say our interest is about 20 million. So that would be an interest received less interest spent. So our net spend on interest is about 20 million, which is roughly about actually what it is if you look at the last set of Leeds United accounts. So our profit before tax, it's actually a loss of -10, 220 income against 230 expenses. That gives us a loss of 10 million. And it's that figure that is our PSR figure. So that would be our PSR figure for 1 year, and that would be added to the other 2 years in the 3-year period to see whether we stuck within the 105 million. If, as I say, if we'd been a regular EPL club, it'd be 105 million, bit different for Leeds United next year because we spent some time in the Championship, as you all know. Terrible. Well, no, happy days actually. But anyway, let's move back to this. Let's say in our balance sheet, we have some cash predicted for next year of about 10 million. 10 million is going to be our average cash balance next year. Remember, these are only figures that we're predicting because we've always got to work with predicted figures until we get to the end of 26. But we're thinking of buying players, so we've got to work out what our predicted PSR figure is, and then see what impact buying the player has. Now, 10 million is not much to spend on players nowadays, but let's say, I don't know where I've got this figure from, let's say our new shareholders are going to put in some cash, and the cash is worth 150 million. So now we've got 160 million in the bank. Fantastic. And your average fan goes, brilliant, we can go out and spend 160 million. No, not necessarily. Not necessarily. Let's look what happens to our PSR figure. Right. So let's say we identify a fantastic player that's going to really, a fabulous playmaker that we're going to have a number 10, and we're going to get them for actually quite a good price of 30 million. So we want to go out and we want to buy that new player for 30 million pounds, right? And that player is going to be on a 3-year deal. So that 30 million player is going to have a 3-year contract to stay with us. Okay. So the cost of the player, our cash will go down by 30 million. So our cash will go down to 130, still available to be spent, of course. And our player will be an asset that we own of 30 million. Now, some of you might be a bit worried at this point. You might be going, hang on, that 150 million new shareholder cash, why didn't you put that into your predicted profit and loss account as income? It's just accounting rules, I'm afraid. I could spend half an hour explaining it to you, but if your shareholders put new cash into a business, that is never counted as income. Yeah, that's called a capital receipt. Income is stuff that you earn from trading. We didn't earn that 150 million from trading. It was simply an investment that our shareholders made into the business that they own called Leeds United. Yeah, it isn't income. And the other thing you might be a bit worried about if you're not an accountant is, why didn't the cost of that player go into our expenses, that 30 million? Well, because the player is an asset. Like what we've done here is we've swapped one asset, cash, for another asset, our player. And that player is an asset because we've got the right for them to play for us for the next 3 years. So what we do with the cost of that player is we spread the cost of it over the 3 years that we've got the player. So what we're going to do is we're going to charge 10 million cost into our profit and loss account for 25, 26, 10 million for 26, 27, and 10 million for 27, 28. So that the asset reduces in value as we reduce the length of contract of the player. So the impact of buying that player on our PSR figure, 2 things. Number one, we're going to have to pay the player's wages. Now, let's assume the player's going to be on 5 million a year. Yeah, so about 100 grand a week. Yeah. So what's going to go in the P&L, and it's going to affect our PSR, the players' wages are going to have to come off our predicted figures, 5 million. And also that spreading of the cost of the contract is going to have to come off as well. 10 million a year, 10 million for each of the 3 years. So our PSR figure is now going to be minus 25. It's still within the 35 million. Yeah, so we're okay for PSR purposes. But we're sailing close to the wind there. And if we go and buy another player, we're gonna have to think about how that impacts. And I'll deal with selling players later on, but that's how the PSR system works. It's that figure on the left-hand side of your screen that the accountants got in their view. And it's, the accountants only work into the rules of the EPL. And if we were in the championship, the championship figures work off the same figure as well. So that's how it works. Okay. Now you might want to switch off now, or you might want to carry on. I'm just going to cover a few extra bits. What happens when we sell a player? What if we sell a player? How does that work? So I'm going to stick with the same example, but I'm going to roll it forward a year. Let's say we get to the end of 2026. We're still in the Prem. Thank goodness we've stayed up. Not quite a European place, but we've had a good season. And for 26-27, at the beginning of July, July 26th, the accountant's going to have his predictions, what's going to happen to the P&L next year. And he makes an overall prediction. I won't put all the detail in. He predicts that we're going to lose 45 million. Not great. Not great. We need to stick to that 35 million average a year. So we decide, let's say, to sell that player. So remember, that player cost us 30 million, but in our balance sheet, we've written his cost down. We charged 10 million of his cost, a third of his cost in our profit and loss account last year. So his book value, you'll use that phrase when you think about your second-hand cars, don't you? His book value is 20 million. So let's say we sell that player for 45 million. You might be thinking, hopefully you won't, because you'll have got into this idea that it's not as straightforward as that. You might be thinking, wow, 45 million, that'll wipe out that loss of 45 million in total. No, it won't. Because what goes in your profit and loss account is not the money that you receive. It's the difference between what you receive and what you're selling. This is an asset that we own, a valuable asset, currently in our books at 20 million, and we're getting rid of that. But we're getting another asset, we're getting cash, 45 million of cash in return. So it's the difference between the two, between the sale price and the book value. It's that difference, which is our profit on sale, and it's that difference of 25 million there that goes into our profit and loss account. And yeah, it will bring down our loss, so it will bring us within the PSR figures, but it won't be as good as you might have expected if you didn't understand the rules. And by the way, one other thing, it does not matter at all if that 45 million is received in cash. It doesn't matter whether we receive it now. It doesn't matter whether we receive it in 3 installments spread over 3 years. As soon as the contract for sale is agreed, then that profit can be taken into our P&L in the year it's agreed. It doesn't matter how the money is received. I've seen a few fans on forums getting very upset about that, and it's a misunderstanding of the rules. As soon as you agree the sale, then that profit, or sometimes you lose money on players, but any profit or loss should go straight into your P&L for PSR purposes. Okay, a few little bits and pieces just to finish off with if you're still here. Are there any ifs and buts to these PSR rules? Is it all as straightforward as you've told us or not? No. First of all, for PSR, they do work on the profit before tax from the profit and loss account of the company, but you are allowed a little bit of relief. So let's say we stick with the figures that we had before. Let's say we had predicted that we were going to lose 45 million in 26-27. The accounting profit can have certain expenses added back, so you can reduce that loss or increase a profit. If you've spent any money on the following things, all the things that the EPL wants to encourage, any money you've spent on youth development, you can add it back. So if you spent £1 million on youth development, then you can add that back to your loss. So if your loss was 45 million, you spent £1 million on youth development, that loss can go down to 44 million. Same with all of these costs. Anything you spent on women's football, which the EPL wants to encourage, anything you spent on infrastructure, maintaining your ground, that wouldn't include the cost of building a new stadium, but anything you spent on, maybe relaying the pitch, maybe adding an extra pitch at your training ground, or any of those costs can be added back to that PSR figure. And lastly, anything you spent on community projects, you often see the players going out into the community, and any costs of those projects, or having like after school clubs for underprivileged kids, any of those costs can be added back as well. All things that the EPL wants to encourage. And lastly, on this, the PSR rules will probably change. What the EPL wants to do is it wants to move towards the model that they have, that UEFA have, which is actually a much simpler system. It's not as hard to explain as this one. And what they did is they shadowed it in this last season, just gone by, 24-25. Some EPL clubs were picked, I don't know which ones they were, to shadow this system and to see whether sticking within these new rules and sticking within the existing PSR rules, whether they worked better or worse. The new rules, some of the current name I think is squad cost rules, and the way they work is they compare player costs. So what's the cost of the wages, the amortization of the players, like we've just seen, any other player related costs? What's the ratio of those costs to the revenue, the income of the organisation, and they're currently saying that the relationship should be 85%. It shouldn't be more than 85%, so the player cost shouldn't be more than 85% of revenue. They're still trialing those. I think they were thinking of moving to them for this existing season, but as I speak, currently clubs have been told that the old PSR rules will apply for 25-26. Okay, that's it. That's PSR in the smallest nutshell. I know it's been a long one, but the smallest nutshell that I can do. Thank you very much. I'm Steve Carlisle. Yeah, leads.